Hello, welcome to the Friday Business News Report. We start with our feature on the show today. Now, share prices have risen in both London and New York after investors shrugged off initial concerns about the knife-edge US presidential election and saw the positive side of a result that could mean Democrats and Republicans sharing power in Washington. Asian shares also climbed and bonds extended their blistering rally as investors wagered the prospect of US policy gridlock would greatly favor some industries while also restraining government borrowing. MSCI's broadest index of Asia-Pacific shares outside Japan climbed 1.7% to reach its highest since February 2018. Japan's Nikkei also rose 1.1% to a 9-month top, and South Korea's Kospi also put on 1.7%. Chinese blue chip gained 1.1%, aided by talks Biden White House might just ease back on trade war tariffs. And E-mini futures for the S&P 500 also firmed 0.8%, and the Nasdaq Composite futures also gained 1.4%. Euro Stoxx 50 futures also went up 0.1%, and FTSE futures also gained 0.2%. Well, joining me now in our Lagos studio to discuss market movement and how the US elections are affecting the volume of transactions so far, I have the Chief Executive Officer, Finance with Mukhtar Mohammed. Good to have you on the Breakfast Show today.
Thank you. Good morning.
Now, it's quite a heavy season we have due to the US elections. Now, historical data shows that there's quite a whole level of volatility in terms of the global stock markets prior to the election. But so far, prior to mid of the election and up until now, we've seen global stocks rally. How does this pattern of trading come to you?
Well, it came to me as a surprise before, but when you look at the historical data, like you always say, before the election, the American market always have that uncertainty. But once the election comes in, no matter who is going to win the election, the certainty begins to play up, especially when it comes to policies. And what we're going to experience in America, like you said in your report, we're going to have, maybe we'll have a blue president, a Democrat, and the Senate also will be controlled by the Republican. Initially, they were thinking that we may have both a blue president and a Republican a Democrat-controlled Senate. Though it's still very close to call, especially when you look at what is happening in Atlanta, where they still have two senatorial seats that could run till January. So when you look at that, again, you look at the policies that are going to be coming in from the president, the progressive policy that comes in from him will also have to go through some challenges also in the Senate. You know, he has said about cutting taxing the rich more, rate cut, corporate tax. Then there will be high spending also. So that high spending is going to cause inflation. They feel that by the time they come in, if Biden presidency will have a lot to do with spending, then there will be the stimulus package, which would definitely come in, despite whoever wins. So when they price this that the market is responding to those positivity, the results that came in, it beat the market never expected that it would be like this, because you look at the projection before then, they didn't even expect so much a close tight race like what they are seeing at the moment. So all this priced into the market, and that's why you're seeing the kind of rally you are seeing in the U.S. market for now.
And also beyond the U.S. market, we've also seen quite a rally as well with the Asian markets as well. But talking about sustaining this steady growth trajectory we've seen in the past few days, what do you think is the way forward in terms of increasing the volume and value of transactions we are seeing in the stock market?
Well, your investors will keep on looking at their risks, and investors will keep on going in there and seeing good stocks that will benefit from policies, especially when you look at the U.S., the global stock. They will see policy. They're already pricing in those policies. They're already pricing in the Biden presidency. That's why you see the Asian market especially goes green, because a Trump presidency will continue with the ties. So the war, part of trade war, and so and Biden is saying that when he comes in, he's going to make sure he looks at
the negotiating table.
And so all those are the positive that they're saying. They also, remember again, Biden has said that he will definitely go back to the climate change. This thing immediately comes in there, he will get there back there. So all these are positive, and he's looking about the clean energy. So that's why he's talking about climate change. He's talking about Republicans are the ones that want to do the biggest stimulus package, and they expected, Democrats. So expected if Biden comes in, there will be that win. And then going forward, everybody is very certain now in America that there will be a vaccine next year. Whoever wins, there will be a vaccine, and a Biden presidency will make more positive to the vaccine because they will feel that he will tell them the truth about the vaccine, when the vaccine will come in, and they will do thorough testing. And remember that even Trump has said that if he wins the election, he's going to sack the director of their disease control unit, Dr. Fauci. So when you add that and that what is happening now, you expect that the market will respond positively. And next year, they expect that the economy will grow. If there's any place that Trump has performed very well, it's in the economy.
Let's also talk about the oil and gas subsector. At the end of the day, we've quite seen a level of volatility that we cannot clearly explain, from the COVID-19 to other fuel demand issues here and there. But for the global market now, how do you think the oil and gas sector is going to fare? With this U.S. election, we've also seen the demand also falling, and now talks of renewable energy. How do you think this would all interface?
I think it's going to be one space that there'll be a lot of volatility in that space. And like you said, President Trump, we know where he stands. And a Biden presidency has not come out with a clear-cut gas policy. And you know, Trump is thinking about American first, and so all the gas reserve that they have in America, strategic reserve, he released it into the system to make sure that OPEC price maintain at a steady decline and maintain at a steady speed. But now, with a Biden presidency, we might see a change in strategy. Maybe they will start buying most of those oil to refill the strategic spot. So it depends on what his policies will be. But for OPEC, I think they are beginning to see that it could be a policy, a little bit policy shift, and so it could be for the positive, but again, it could be also goes the other way around. When you realize that a Biden presidency will cause tension between Russia and America again, because definitely that is where that presidency will be. It could be positive for the Chinese.
And also fine-tuning talks with Iran as well is also coming into the picture. But now, talking about the demand for our oil at this point in time, whether or not the pendulum swings in favor of Biden or Trump, we still see that the policy directions will still largely affect our Nigerian economy. Talking about our dwindling foreign reserves already, that's where we get most of our funds from.
Unfortunately, we got it wrong from the start. If you look at the budget, we've already taken our budget at $40 per barrel. I think that's a very big, it's going to be a big challenge. And we know that the legislators may even move it to $42 because presently now we're trading between
39 as of this morning.
39 this morning. So it's not looking good for us. So we'll need to come out with a policy. I mean, maybe a shift in that. In terms, I was looking at the oil price hovering between like $35 per barrel. That would have been good so that we can have those strategic points to boost our reserve and have more of this boosting reserve to make sure we have stability in the exchange rate. And remember that the foreign investors are not coming in yet. So volatility in the exchange rate is still going to be high for now. The government have tried to maintain a 380, 383 in the import-export window. They are even still struggling with that. And then in the parallel market, it has become steady at 460. So, and then no investor wants to come in. That the difference between the parallel market and the import-export window is too long. So that's why we are not seeing those foreign investors that sometimes come in and stabilize our currency. And then diaspora funding that we're expecting also, we expect that diaspora funding is going to drop too next year. So we'll have a lot of challenges in this area.
Let's bring the Nigerian Stock Exchange performance now in focus. Do you think we're going to see any sort of shift? Now, in terms of our localized situations, we had instances whereby the business climate was almost grounded to a halt. First by the COVID-19, and then we saw the protest and then the looting, which apparently caused a whole lot of damage, and so many investors and investments were largely hit badly. The sentiment is not just favorable at this point in time, even though we are trying to chart some level of recovery. Do you see any new shift as the year is slowly running out?
No, definitely there won't be a shift. I expect the market to finish the year high. It's already doing about 14.59%, a positive, compared to where we're coming from when we had the pandemic and we also had the crash in oil price. And now what is responsible for the kind of movement we're seeing in the market at the moment has to do with investment vehicles. We have very few investment vehicles around, and the stock market, the equity market seems to be the only vehicle that can give you high return that could also be able to beat up with your stand by with inflation figures that have been coming out, causing inflation to go high. And then secondly, again, you must also realize that why we might have those steady moves, because most of the investment we're going to see are local investors, not like before that we had the foreign investors that you are very sure that they once the price goes up, they will leave. But now what's playing the market is the local investors.
For the lack of time, in just less than a minute now, taking cues from the American economy, we have both candidates. We have the one who is pushing for America first, and then there's the other one, that's Biden, also saying buy American. What cues should we take from this policy direction both candidates are moving on with?
For me, I think the Trump is buy Nigeria.
Okay. Thank you very much for your time on the Breakfast Show today, Mukhtar Mohammed. It's been a pleasure. And hopefully we'll see the Nigerian economy also bounce back gradually. And then we can able to say, well, we don't have to rely so much on external factors. Thank you very much once again.
Always a pleasure. Thank you.
Well, that's it on business on the show for now. It's time to cross over to sports news, but we'll take a quick break first. And Mian has the latest.